Yeah, so I think there's two dynamics here, right? So there's first the Huawei piece, which I think is pretty structural. Essentially, if you can't sell anything to Huawei, I mean, that's going to impact ADI, that's going to impact Qualcomm, the Broadcom, Skyworks, et cetera, all these kind of smartphone plays. But then on the other side, on the actual China-U.S. trade tensions, I think that one actually sets up a lot better for high tech. Essentially, if you really think about it, they're talking about a $30 billion tax, right? That's less than 0.1% of federal income. And so when you look at that number, it's really small. And so hopefully that gets fixed, because essentially Trump does have kind of the, I guess, the royal flush, you'll call it. If he says you cannot buy any more GPUs, their entire AI infrastructure collapses. So I think that one eventually solves itself, but the kind of regular components, kind of the boring, I guess, low-tech chip stocks will be hurt because they won't be able to sell to Huawei.
Sure. Getting back to the ones the most sort of leveraged to Huawei, though, I mean, those are the ones that investors are looking at to really benefit from the build-out of 5G. Does that investment thesis take a back seat to what's going on in the China-U.S. trade war, and specifically with Huawei?
Yeah, I think everything that's Huawei exposed will take a hit. So that's going to be your FPGA plays in 5G. It's going to be ADI, because there's just nothing you can really do about that. Essentially, if they're denying any sort of shipment, anybody with Huawei exposure, I think they're going to be impacted. But again, I think from a structural perspective, this is going to highlight the fact that U.S. companies have the best tech products, essentially. There's only two GPU companies with NVIDIA and AMD. They're both American. There's only four semi-cap equipment companies. Three of those are American. And there's only two design software companies, and all those are American. So at the end of the day, if this really gets pushed to the end of the road, you're going to look at U.S. semiconductor high-tech stocks being better.
Is there any sort of long-term growth risk to some of these companies that are leveraged to 5G, and more specifically to Huawei, in that they will be shut off basically potentially from participating in the growth of 5G networks around the world, for which Huawei is building out that network? So a lot of the emerging markets, for instance, not the developed countries, but really the Chinas of the world, the South Americas, et cetera. In the long run, will that hurt their growth prospects?
I think it will. I think the chart you guys showed up just a few minutes ago is probably the most telling. Essentially, anybody with smartphone exposure, 5G related to Huawei, those are the ones that are going to hurt the most. And I don't see that one being solved anytime soon. So those are the ones you probably want to avoid near term.
As you see these stock prices slide on many of these issues, would you be buying?
I would be buying high tech again. So I think that we've said, Synopsys, AMD, and Micron are kind of our three favorite names. I think the Micron one's not going to work near term, because at the end of the day, that needs some smartphone upside, which is going to be damaged by Huawei. But when you look at AMD, Synopsys, and even NVIDIA, people are going to have to realize you cannot do AI, you cannot do deep learning, you cannot do any sort of high tech without those three companies. And Trump can, at the end of the day, say you can't buy those if he really wants to push this trade war to the end game. So I think something gets done. But again, I think that you want to hide in high tech, because those are the ones that are the most insulated.